Welcome to the most recent Q&A session for Tesla stock investors. We'll be responding to some of the most frequently asked questions from Tesla shareholders worldwide in this video. Tesla is the world's top producer of electric vehicles and is constantly at the forefront of technological innovation. As investors in Tesla, we are interested in learning as much as possible about the company's goals, profit margins, and cost-cutting measures. We'll be delving deeply into the most important problems that Tesla is now experiencing, from the much-awaited Megapack margins to the most recent developments on the 4680 cells. However, it goes beyond the autos. We'll also examine Tesla's energy offerings, charging infrastructure, and even marketing strategies. Thus, take a seat, unwind, and get ready to discover everything there is to know about Tesla and its future goals. This film contains something of interest for everyone, regardless of experience level with investing or level of curiosity about electric cars. Let's go right into the questions and discover what Tesla's future holds. Remember to subscribe and give this video a huge thumbs up as well. Wonderful news! At last, concrete proof of the quantity of Megapacks produced by Tesla at its Bradford Lathrop factory is available. We would also like to thank Bradford Ferguson for his hard work in counting the number of Megapacks that were added or removed from the facility using drones. Over the course of 6 days, Bradford counted 67 Megapacks outside the facility and 42 left. However, how many were actually made? Once more taking to the skies, Bradford observed 83 Megapacks in the parking lot, indicating that 16 more packs were made, for a total of 58 packs. This would imply that approximately 10 megapacks are produced daily, 7 days a week at the Lathrop site. If every megapack fetches a price of $2 million, the annual revenue generated would be an astounding $7.3 billion. Tesla might make $3.5 billion in profit at a 50% margin. However, it's unclear when this money will appear in Tesla's earnings reports, because megapacks are often sold in large contracts. However, given these astounding figures, it's obvious that megapacks will have a big impact on Tesla's profits. In the upcoming earnings calls, Tesla's stock price may be greatly impacted if the firm highlights its production and possible profitability. The production of Tesla's Megapack appears to have a bright future. There are a few things to think about if you're considering investing in Tesla or are simply interested in learning more about the company's financial future. The Megapacks are among the most interesting new inventions. They have the potential to be very profitable for the corporation. Megapacks have the potential to transform the car industry in a number of ways. First, by lowering the cost and increasing accessibility to energy storage, they could contribute to the reduction of the cost of electric vehicles. Second, they might extend the electric vehicle's range, which has been a significant deterrent for some buyers. Thirdly, by offering a mechanism to store extra solar and wind energy, they could hasten the switch to renewable energy sources. Fourthly, they might provide Tesla an additional revenue stream that would enable it to keep funding R&D and product line expansion. All things considered, the extensive use of Megapacks has the potential to drastically quicken the shift to a low-carbon, sustainable transportation system and alter the competitive landscape of the auto sector. However, since the figures haven't appeared in their earnings reports yet, it's difficult to predict with certainty how much money they will gain from this new product line. It's obvious that the Megapacks will be a big deal for Tesla despite this uncertainty. How much money they will make is the main concern. Margins, which are projected to range from 10% to over 50%, are an important consideration. Even though the top end of the range might not be long-term viable, Tesla and its investors find this to be an intriguing possibility. Remarkably, according to a recent survey, 69% of participants believe Tesla shouldn't do advertisements. This begs the question of how the business intends to keep expanding and attracting new clients. Building a second factory is one way they're accomplishing this, though it's still unclear exactly how this will affect their bottom line. Let's go on to some particular queries for Tesla officials. The Cybertruck is one of the most often raised issues. When it enters into production, people want to hear about the new features, cost, and specifications. The Megapacks and the energy industry are the true focal points. despite the fact that many investors will find this intriguing. Investors are keen to learn more about the potential here, including when official advice on the megapacks and Tesla Energy as a whole can be expected. I too have a question concerning Tesla insurance. In contrast to EVs, energy, and fully autonomous driving technologies, this will not be a significant revenue generator for the corporation, even though it is a nice bonus for customers. However, it's important to monitor the adoption rate and yearly savings average. Lastly, there's the matter of how much money Tesla Energy is expected to make this year. It is evident from the company's recent increase of megapack production that this is one of its main priorities. Investors are looking forward to more details regarding the revenue potential of this new product line. A lot of concerns have been raised over Tesla's future, and supporters and investors are excitedly anticipating the company's next earnings call. The megapack margins and the product scalability are two key questions. What Tesla's auto business's profits are is another crucial question. Investors are interested in learning about these important factors. It's interesting that, despite advertising's critical role in marketing Tesla products, there hasn't been much talk about it. How effectively Tesla uses the Inflation Reduction Act to lower costs across its product line, including its auto and energy goods and charging, is another matter for inquiry. It is crucial that investors think about this subject. The next query relates to Tesla's 4680 cell development. Investors are interested in learning whether the cells are performing up to par and when sales will catch up. Given that Tesla is making a lot of effort to obtain government subsidies, this is a more urgent topic. Another key component of Tesla's future is its energy company, and many investors are curious about when it will grow to the point where it can release its own financial statements. When will Tesla enable owners to move complete self-driving software from an old vehicle to a new one? Is another query from customers. One of the most intriguing features of Tesla's approach for investors and industry analysts who are closely following every step the firm makes is its pricing process. The question of how Tesla determines its prices is one that has a lot of curiosity, but has a quite simple answer. Pricing is changed by the company in response to the volume of orders it receives. Given that its business model is mostly based on direct-to-consumer sales, Tesla enjoys a distinct edge in terms of pricing. In contrast to conventional automakers, who depend on dealerships to sell their cars, Tesla sets its own prices for all of its goods. This eliminates the need for the business to worry about the intricate details of dealership markups and fees, allowing it to swiftly modify prices in response to customer demand. Put practically, this indicates that Tesla bases its pricing approach heavily on the volume of orders it receives for a given product. Tesla may increase pricing to capitalize on favorable market conditions if there is a significant demand for a particular vehicle. On the other hand, if demand isn't as strong as anticipated, the business could cut prices to boost sales and get rid of inventory. Of course, Tesla takes other aspects into account when determining prices, including manufacturing costs, supply chain management, and rivalry with other automakers. But a crucial feature that has allowed the business to stay ahead of the curve in the electric vehicle sector is its capacity to swiftly modify prices in response to customer demand. This pricing technique can be nerve-wracking and thrilling for investors. On the one hand, the capacity to instantly modify pricing in response to market conditions can result in large financial gains. However, because consumer demand is so erratic, prices can change quickly, making it challenging to forecast.